Good day to one and all. This is Dr. Sivaraman of iknowindices.com. So I have been giving the Tracking the Forex Market Together webinar part 1 between 9 and 9:45 GMT on December 12th. And FX Street was kind enough and they recorded it very fast and displayed it in the website. Probably you can see it. Tracking the Forex Market Together part 1 is being displayed in FX Street. If you see in the webinars straight, if you click, you can come across this particular webinar recording is available. So those of you who missed the part 1 of the webinar can just go through that of the part 1 and after attending part 2 so that you will be able to get a consolidated information with regard to my concept of perceiving the market. Now, it is a simple market tracking technique and basically we use effective trading strategy to earn consistently from that of the market. In part 1 of the webinar, I just reviewed the live market code page and also highlighted how exactly the high, low and net change would be used as a reference material for us to perceive the market. And as far as the trades are concerned, I have not taken any trade during that particular time, during part 1, for the simple reason that there was really want of time and I exceeded the time before coming with this particular slide. Besides, the market was also making subdued move. Then I promised that I'll take the positions during that of part 2 of the webinar, and before that I like to explain to you how exactly the live market code page could be used effectively for our trading decisions. Now in the live market code page you can see the currency symbol, the bid and the ask. So it might vary depending upon the spread between the bid and the ask in your platform, and it is about 5 to 6 seconds delayed from that of the actual market. So you might come across a slight variation of 1 or 2 pips in this code and your trading platform. But still we can use it as a reference material for our understanding of the market. So you find the spread, the bid and the ask, then you come across the high and the low. So these are all the high and the low. They set around 3:30 GMT during that of the Japanese session, and subsequently they breach the initial high and form the new high, breach the initial low and form the new low. That is how they make the spread increased between the high and the low during the course of the day. The net change indicate what is the current level of euro, for example, is 30 pips. So that means it is 30 pips higher than that of yesterday US session close. So yesterday US session close was around 1.3005. So 30 pips below that was yesterday US session close level. So you can easily determine how exactly this particular pip net change indicate what was the earlier close level for the previous day, and from there the net change either increases or decreases. In the case of euro it is about 31 pips positive net change, it is shown in green, and in the case of CHF it is 36 pips negative net change, it is shown in red. So this is how you will be able to find out where the current market is. Then also you will be able to see that the numerator currency, where the currency symbol is on the numerator of the ratio. Euro USD, euro is the numerator currency. Then GBP USD, GBP is the numerator currency. And AUD/USD, Australian dollar, is a numerator currency. That means in the ratio you find the currencies are in the numerator of the majors. Then here USD yen, then JPY is in the denominator, YEN or JPY is in the denominator, then CHF is in the denominator, CAD is in the denominator, then they are referred as the denominator currencies. So when the numerator currencies go up, then it is USD weakening move, because USD is in the denominator. So when euro goes up, USD is weakening. GBP goes up, USD is weakening. Australian dollar goes up, USD is weakening. On the other hand, when USD yen goes up, USD is gaining, because it is in the denominator. It's a simple mathematical calculation. When the denominator becomes weak, then automatically the ratio becomes positive. So similarly, CHF, which is in the denominator, it shows the USD weakening move, whereas USD yen is showing the USD gaining move. Then Canadian dollar, USD CAD, it is on the negative net change. That means it is showing USD weakening move. So all the currencies are showing USD weakening move excepting USD yen, which is showing positive net change. So with the help of the net change, we will be able to understand how exactly they are making the moves in the market. Then besides the high and the low, what you come across as the current high and low are not the current or not the initial lows and the highs. So let me show the slide what I have shown it during the European session. So this particular slide I show it during that of the Asian session live market analysis webinar, and there I note down the initial lows and the highs around 3:30 GMT on a daily basis and display it for the traders, and those who are attending the webinar, they will be able to get it. Otherwise, they can straight away note down when the time is 3:30 GMT, they can note down the initial low and the high in all the 4 majors and 2 commodity pairs and use them as a reference level. Now, I was explaining during that of the European session, 1.3001 was the initial low in the case of euro. Towards close of Japanese session, they made a brief downward stop, and as expected by that of the forecast, and they came to that level of 1.2996 and gone above 1.3001 in less than 30 minutes. That means during the late Japanese session, they made a brief downward stop. And similarly, in the case of GBP, the initial low was 1.6112 and they breached and formed the new low 1.6095, and in less than 30 minutes they have gone above, and then subsequently during that of the mid-European session they started going above that of the initial low. So still the initial low is 1.3014 in the case of euro, and the initial high in the case of GBP is 1.6121. Currently, if you refer the market, euro is still above that of the initial high 1.3014. GBP is above that of 1.6121, and in the case of USD yen, still it is above 8262. So that shows they are all the 3 currencies are in green color since that of Japanese session. So you can understand all the yen crosses are taken up. So euro yen has come up to 108. This nobody envisaged. So they made the contrarian move. When euro is going up and USD yen is also going up, euro yen goes up. So if you see the net change in the case of euro, it is 32 pips. Is net change in the case of USD yen is 33 pips, whereas in the case of euro yen it is about 70 pips. This is called double edge effect. They push both the currencies upwards. As a result, you come across double the pip net change you find, which has happened in the case of euro yen. Similarly, in the case of GBP yen, they gained about 60 pips, and when you see GBP, it's hardly 10 pips, and yen, it is 33 pips. So altogether it is around 43 pips, whereas in the case of GBP yen, they gained about 60 pips. The pip value is not 1, so there is a slight variation with regard to the pip. So as a result, you come across roughly around those pip changes. You find euro yen has gone to 108 and also GBP yen has come to 133. And somebody was asking during the European session how exactly they are doing the trending move. So now you will be able to understand they continue to gain the levels in the case of euro yen and GBP yen by making a contrarian move of gaining the levels in the case of euro, gaining the levels in the case of USD yen, and gaining the levels in the case of GBP. So Euro Yen and GBP Yen, they gained the levels, and they are expected to continue the levels and continue the rise, and then people will say that for year-end carry trade is happening. So they can use any sort of attributes like carry trade, or there is accumulation of positions, etc. Every season you will find new terminologies are being introduced. So probably, in 2009-10, they introduced the new terminologies like risk appetite and risk aversion. Before that, people used to say that USD gaining move or USD weakening move. But subsequently, they made that cunning moves like just make a drop as the USD gaining move, then followed by that rise in the case of Euro and GBP, and they said that it is risk appetite move. So similarly, now you come across the gains like this, and they will come out with some attributes and some names. So we will go in depth into the analysis of such words, and any analyst will feel if we don't use such words, then we are out of picture. So they also try to use such terminologies, and that is how you find it becomes popular among that of the traders, among the financial experts. So now what you see that Euro and GBP, they gone above that of the initial high, and during the European session I was not taking the position in the case of Euro or GBP for the simple reason that they gone above that of 1.3014, went up to 1.3031 and came down and just gone below that of 1.3014 after 2 hours. So I said that they had done the extended move and they will make a small dip before making a rise, and they have gone up to that of 1.3009 and then subsequently gone above 1.3014 and stayed there, started gaining and gone up to 1.3053, and now currently holding around 1.3041. And here in the case of GBP, what they had done in the case of Euro, they are trying to do it now, because when Euro gains more and GBP gains less, what happens? The Euro GBP cross goes up. See? And during that of the Japanese and the European session, Euro GBP was trading around 0.8062. Now it has gone to 0.8090 because they gained more in the case of Euro and less in the case of GBP. Because they know very well the traders are awaiting for the FOMC outcome, the interest rate decisions. So obviously they will not commit more in the case of the majors, so they are trying to handle the crosses. So before such big events, they try to handle the crosses. So now they have gone below that of 1.6121, similar to what they had done in the case of Euro during that of the European session. Whereas in the case of USD Yen, and they formed 8262 as the high, low is intact, 8262 was the high, and they breached and gone about and gone up to that of 8293, and they are still holding it, and they are not gone below that of 8262. In the case of CHF, the initial low was 0.9313, and they are just gone below that and still holding it. So now you find that Euro is making only 34 pips positive net change, whereas USD CHF is making 40 pips negative net change. And when they make such a move, then CHF becomes stronger than that of Euro. Euro CHF comes down. Euro CHF, they have been holding around 1.2128, and they have just dropped it to 1.2106. 19 pips negative net change is seen. So this is how they handle the crosses. So you need to understand whether they are handling the crosses or they are handling the majors. So if they are handling the majors, then we have to take positions in the majors. They are handling crosses, we can only trade in the crosses. I'll explain to you with the help of the market timings followed by that of the players, then you will be able to fine-tune your understanding. Now with regard to the commodity pairs, Canadian dollar, 98.56 was the initial low. They just breached it by 3 pip and then gone above that of 98.56 and currently holding around 98.58. And the high was 98.66. They have not breached it. And as I explained many times, they make a brief downward stop and below that of the low and an upward stop and afterwards during the day. So on a daily basis, you can see in the case of Canadian dollar, USD CAD, they make one downward stop and followed by that of upward stop, and sometimes they make a small drop and hold it and then small rise and hold it. That sort of moves they are doing it, and it will be in a range, and it will not make any corresponding USD weakening move similar to that of Euro and GBP. And also Australian dollar, you find that the initial low was 1.0523. Yesterday people were thinking that Australian dollar find it very difficult to go above that of 1.05. Now they are set 1.0523 as the low. They are not breached since start of the Japanese session, and then the high was 1.0542. They went up to 1.0556 and still holding above 1.0543. So you can understand how these levels, initial lows and the highs, are playing a vital role in understanding their moves. So it is not my own creation of noting down around 330. It's all based on the information, and they use the 330 levels as the initial lows and the highs, and they use it for their effective communication among their partners. So now you find that they have breached the high in the case of Euro and staying above, and they are hovering around that of initial high and still holding high in the case of USDN. They breached the low and stay below in the case of USD CHF, and Canadian dollar, they hardly made a dip of 3 pips, and in the case of Australian dollar, they are holding above that of the initial high. So these are all the things we come across with regard to the initial lows and the highs, what we have noted down around 3:30 GMT. Now coming to that of the market timings. So I explained in the part 1, and probably I'll briefly explain this and go to that of the trading strategy using this particular page. So according to the natural conditions of banks opening and closing, the players have chosen to have 3 different parts or sessions for the day, namely session 1, session 2, session 3. For our convenience, we can call it as Japanese session, European session, and US session, because during those time those countries are active. Then in between the session you come across the gap time, during which the banks do not place orders for the currency conversions, the orders which are necessary for the exporters and the importers. When there is a dollar demand or euro demand and things like that, they place huge orders and accumulate the positions from that of the market. And mostly they do it as a single trade, so their orders will be in billions. So there is a gap, and during that gap time they don't place that order. Between Japanese and European there is a gap time, between European and USA there is a gap time. So during the gap time the players make use of the absence of the bank orders, and they try to make the stop-ins or the false move. So this you need to understand. Many of the people think that during the late evening on US and on Sunday especially, the market make very big moves, and there is nothing but the gap time. The bank orders do not come, and before opening they try to create all sort of fears by making a quick upward and the downward moves in the market, and that is why you come across the gap openings happening in the market, and that is one of the strategy for the players to create the market sentiment and act against that of the traders. Now coming to that of the market reading, in the live market code page you just note down the initial lows and the highs, and later on, and also the net change, and refer to that of the current market level. Euro is currently trading above that of 1.3014, that was the initial high. GBP is trading around 1.6123, above that of the initial high, 1.6123. So when they sustain here from the start of the session for 30 minutes, then you understand that they intend to make further rise in the market. How we identify that? Because we refer to that of the initial lows and the highs, and we know very well during that of the early and the late sessions they are active in the handling the majors, and during mid sessions they handle the crosses. And when you come to that of the type of moves, we know that they make 2 different type of moves. One is less than 30 minutes move, another one is more than 30 minutes move. In less than 30 minutes move there are 2 types. One, they make a downward stop and below that of the low, initial low 1.3001, came down by 5 pips. Sometimes they come up to 15, 20, 25 pips and then reverse in less than 30 minutes. When they reverse in less than 30 minutes and go above that of initial high 1.3001, then we know that they have done the downward stop. And as I explained that in the financial market, only by cunning practice we will be able to earn money. So they make a downward stop and induce the long holders to stop out, or induce the long holders to liquidate the long position at the lowest level and then take up and make a rise. So they made the rise and gone above that of 1.3014 and they are still holding. If somebody thinks that euro has to drop and take a sell, then they have to wait. Still they are not being given the profit booking opportunity. And probably people will think that after FOMC the market is expected to come down, then at that time I can book profit, and before that they will make one quick rise and induce the fear. When the loss increases, probably they will just liquidate their or do the short covering. Afterwards the players drop the market and make little bit of volatile moves around that of FOMC announcement time and continue to rise, because we identify they are holding above that of the initial high for more than 2 hours. As I explained, there are two type of moves. One is stop and they just go below that of the initial low. In the case of GBP also, they have gone below that of the initial low about 5-6 pips and then gone up in less than 30 minutes. The other one is false move. During the gap time, what I mentioned, they just go closer to that of the low and come up very fast and breach the high and go above. And so they pretend as if the market is going to drop and subsequently they rise the market. So this is to induce the traders to commit wrong trades. So that before the US session starts, actually 14:30 GMT, as I explained in the previous slide, the US session starts. Around 14 GMT they will make a very quick dip or quick rise. Then people will think that US session the market is going to drop, and quickly they liquidate the long position, what they would have taken it as a breakout trade on the higher side, and turn short and later on see that the market is going up. So this sort of false move induce the traders to make distress trade, and those moves happen in less than 30 minutes. Then the extended move, which is a move which happens, or they cut the high, initial high 1.3014 and stay above there for more than 30 minutes and sustain up to 2 hours. Then it is referred as an extended move. So they make a quick rise during that time. Extended moves are quick moves, whereas intentional moves are slow moves. So they made a very quick rise during the early European session. You would have noticed went up to 1.3031 and then after 2 hours they just stopped cutting that new high and started making the slide below that of 1.3014, came up to 1.3009. Below 1.3010 they just hit the stops or the trailing stops, then started gaining the levels. So they know how exactly the traders will trade in the market and try to see that the stops are filled mostly. So when the traders stops are filled, the players make the money. Then the next move is the intentional move, and this is a move which continues more than 2 hours. So they breach the high and stay above the high and continue to rise and cut the new high and things like that. After a dip during that of the mid-European session in order to handle the crosses, then subsequently they started gaining the levels in the case of Euro and GBP, and now in the case of GBP they went below that of the initial low just by about 1 or 2 pips and then started coming up. So this is an intentional move, and also it is confirmed by the slow moves. So when it is a slow gain, then consistently they wanted to buy, hold, so that traders will think that this could be the high, I can take a sell. Then after about 30 minutes they just gain another 10 minutes and hold. Gain about 10 pips and hold. Then the traders will think that okay, I can do the averaging so that I can come out in scalping, then take another sell. Then gain about 20 pips and hold. Then traders tend to take another sell position and wait. Then the players take it about 50 pips. What happens nearing that of FOMC? Already traders intend to make the scalping would have committed about 4-5 trades in the in the assumption that he is doing the averaging trade, so that he can just come out below that of the average with a net profit, whereas they just quickly gain the level around FOMC announcement time. Then the trader become panic. He thinks that the market will quickly go up, so he will just do the short covering in all the positions, because all the positions come in loss, then automatically the usable margin or the drawdown will be more because he has over traded. Then once that shorts are covered, you will find after the FOMC they will make a small dip, and you will think that I had been doing nicely. The last quick move has perturbed me. I had done the short covering, and later on they made the dip. Then immediately he will reinstate the sell when he is emotional and thinking that it will come down because the data is perceived like that. Then later on you see that they continue to gain the level with a different story. So ultimately what we perceive is not happening in the market. That is why I always say what is visible in the market is not true. You have to read the hidden agenda of the players and try to take the positions, so that if you trade along with that of the players, you will be able to really make money. So identify the type of moves, what move they are doing, stop and false move, extended move, or the intentional move. During the mid sessions, they make the swings between the high and the low, a small swing near that of the high, a small swing near that of the low, like USD CHF. They are not breached the low. So don't go in for a short selling in the case of USD CHF just because it has breached the low and staying below, because they have stopped cutting the new low for more than 30 minutes from the start of the session. So initially early session they had done it, and subsequently holding here, inducing the traders to sell. Similar to that of USD yen, they will continue to rise CHF. Yesterday during that of the US session, many of the traders who are familiar with my analysis would have noticed that all the currencies were in green. They made such a contrarian move and continue to gain the levels, even though the gains were about 30-40 pips, but they made very big moves in the case of the crosses. So understand how the players make the moves, then you will find that market does not give you any surprise. Then if you take any position, use the stop to limit the risk, and the stops can be 30 pips. If the hedging facility is available in your trading platform, instead of stop you can use the hedging order. So you won't make a simultaneous position as a both buy as well as sell. Instead we will take a buy position or fine tune the buy order by keeping 10 pips below that of the market, a buy order, so that a small dip, or 5 pips below the market, so that small dip you will be able to get that buy. It's a fine tuned entry. Then subsequently we will keep 30 pips below a hedging order in the same currency pair if the hedging facility is available. In the event if the hedging facility is not available, then we can keep the stop. And if you find that your trading platform is not offering the hedging facility, my simple suggestion will be, whenever the market is subdued with regard to the moves, don't enter into the market. When they make a downward stop, and try to take a buy. When they make an upward stop, and try to exit out of the position, so that you don't require any stop. Only thing is, you need to have the patience to look for such downward stop and the upward stop. How you can look for? You know very well, when you are wanted to trade in euro, either session start time they will make a downward stop, or during session close time they will make a downward stop before making the rise, or they may do an upward stop and come below that of the initial high in less than 30 minutes. Then you can take a sell. You will find they will make the drop. Why they are doing the stopment? So they know very well that traders are short, but still some traders, their traders are short and they wanted to drop the market. So what they do is they rise and hit the stops on the upside and make the drop. And why they drop? Because they want to sell volume. So they quickly place the sell order in the market. When euro is trading around 1.3043, they keep a sell order 1.3020 of a huge volume. So it pushes the market downward all the way. That is how you find the corrections happen in the market. Whereas you and I cannot place such orders in the trading platform to push the market on the downside or on the upside. So that is a limitation for us, whereas that is an advantage for the players. So you find that they try to always hit the stops of the short sellers before making a drop, hit the stops of the long holders before making a rise. So as I explained during the European session, during the start they made the downward stopment. Then afterwards they gained quickly and gone above that of 1.3014 and made that upward stopment. So if they have done the downward stopment and take the buy position, be sure that they will make an upward stopment and exit out of the position. Is it difficult? But you have to patiently wait for such things to happen. You need not watch the mid sessions. You can just watch first 1.5 hours of the Japanese session, early session, and the last 1.5 hours of the session, the late session. For your benefit, I'll just show the timings slide. Okay, so Japanese session from 0030 to 2 GMT will be the early session. From 6 to 7:30 GMT will be the late session, late Japanese session. Similarly, 8 to 9:30 GMT will be the early European session, and 12:30 to 14 GMT will be the late European session. Then US session from 14:30 to 16 GMT is the early session, and from 20 to 21:30 is the late session. So if you focus the market only during the early and the late sessions, not bothered or not being glued to that of the trading terminal or your live market code page, you will find you are really fine-tune your trading timing so that you can attend to other works and still continue to make money from that of the market at ease. So why I am telling this? Because many of the traders, they come with the objective of making money from the market. And why you want to make money? In order to increase our lifestyle and comforts in life. So in the process, what happens? They pump in some money as the reserve and continue to trade and become stressful. And after some losses, they become more stressful and they continue to watch the market sleeplessly and odd hours and things like that, sleep during that of the normal working hours, and really upset the biological rhythms, and ultimately what happens? They become sick. But the main objective of making money is to increase the lifestyle, whereas in the process of becoming addicted to trading, you decrease your lifestyle. So it becomes contrarian because we fail to understand what is happening in the market. And ultimately, what is happening in the market? It is very, very simple. That the players create the market sentiments and act against that of the traders. So when they create the sentiment, find what is the hidden agenda, why they are creating such sentiments. You know that they have been talking for quite a long time about the Greece problem, when euro was around 1.25, 23, 21, 20 and things like that. What happened? They just strongly induced the traders to sell, and technically the analysts were telling that euro could go to 1.16, but they had taken it to 1.30. See how they are deceiving the traders. So you need to understand, you should not get deceived. That's what. So use a stop of 30 pips and enter when the market is making quick moves, then you don't require any stop. And once the position makes profit, keep stop at entry, and once the stop at entry when the position makes about 25 pips profit, and trail the stop, and also keep the limit of 45 pips, 75 pips and things like that, or whichever the level you consider as the resistance level, and you keep it. But doesn't mean that you have to exit at that level. If the going is good, you move the limit order, the take profit order on the higher side, and the trailing stop will automatically protect your profit and maximize it. The market can either hit your trailing stop or the limit, so ultimately your profit is protected. So focus on one trade at a given time and try to maximize the profit in that particular trade. So you might be doing about 4-5 trades in a week, but still your profit will be much higher than that of a scalper who continuously watch the market for about 15 to 18 hours and try to earn in 70% of their trade with 10 to 15 pips or 20 pips and things like that, lose in some of the trades, and ultimately the impulsiveness is not reduced. So when the impulsiveness is not reduced, then you tend to continue to book profit of 10 to 15 pips. You fail to understand that you can maximize the profit. So you fail to use the trading strategy. So my simple advice will be, avoid doing scalping so that you don't become impulsive, and wait for a good opportunity to come in the market. Whenever the quick moves will happen in the market, understand the players are trying to play a trick with the traders. At that time, when they stop cutting the new low for 30 minutes, you buy during the session, not during the gap time, during the session. Then you will be able to book profit. And during such moves, when they breach the initial low and come below and continue to cut the low slowly, understand it is an intentional move on the downside. So you have to wait for 2 sessions and the start of the 3rd session and try to take a buy. You will see a definite profit in that, because the players don't do hat trick. Then similarly, when they continue to rise and breach the high and stay above, they will just gain for 2 sessions. And the 3rd session, they pretend as if they are going to rise, hit the stops and start selling. And then you find that the market comes down. So keep in mind, they don't do similar moves for more than 2 sessions, more than 2 days, more than 2 weeks, more than 2 months. So if you keep all those information, then you will find trading is really a pleasure. Then, now coming to that of the trading during that of the EOS session. Now Euro is consistently staying above that, and GBP is staying just above that of the initial high, and they are not breached the initial high, but GBP is staying near above that of the initial high. So there is a great potential for GBP to go up first. So we will buy. So I'll take a buy 1.6122, then immediately I'll keep a stop. $30 pips below that, a stop. And the exit point, you know the current high 1.6149. So we can keep initially 1.6149, and once you are able to keep stop at entry, and when they try to take out or take the market above that of the initial high, we will try to move the exit. When they come about 10 pips closer, we'll just move it, and our trailing stop will be there just 15 pips below that of the market. So still it will be protecting profit. We can continue to rise, and then you find that you are able to really make money. They just made the dip in the case of GBP and Euro. Now doesn't matter. Now you will take a buy in the case of GBP. Whenever they make quick moves, understand they are all false moves. So how the exit is decided? The high set for the day. Then let us see, we have the hedging order to limit the risk, and once the position makes profit, we will keep stop at entry. I'm sorry, some wrong typing has happened. And similarly, in the case of Australian dollar, it is holding above that of the initial high 1.1 1.0542 was the initial high. They are holding around 1.0543. We can step in here. So we'll take a buy, then keep the exit, because today the moves are very, very narrow. That is why we are forced to keep the hedging order. But I had given the conditions earlier. When the spread increases more than 40 pips between the high and the low, we can start taking the positions. We'll be able to really see profit. And they are doing the intentional move. They are expected to continue to rise even after FOMC. So I don't know anything about FOMC, what decision they are going to do it, but based on the moves made by the other players, I am informing you that they intend to make the rise after the FOMC. Because they are doing the intentional move, it is a slow gain. They may make little bit of volatile move, and you may get confused whether they are going to drop or rise and things like that. There will be a lot of information pertaining to that. People might be talking various things, but you silently watch what they intend to do after that calmly without any fear. Then you will be able to see that. I am keeping the high 1.0556. So they are all temporarily fixed as the exit level and the initial high. When the market started making move on the upside, when it is coming, showing about 5-10 pips, we will just gain it, because this profit taking level is hardly about 12 pips, so we have to necessarily move it upward as they gain the levels. Then similarly, the hedging order, we will try to keep it 30 pips below initially, and when they are not coming below that, then we can try to keep the hedging order of the stop even tight, closer to that. You know that initial high was 1.0542. We can just keep 10 pips below that. That way you can fine tune, the risk reward ratio will be better, and then you will be able to see that they are able to really give you the profit. And reading the market is most important, and then you take the trading decision. Still, no, our reading can go wrong as long as we are human, so we cannot try to take chance with our money. So we have to necessarily keep the stop to limit the risk which you can afford to absorb, and subsequently you can earn back by subsequent trades. So you cannot make the loss unlimited, then you have to limit the loss. And in the event if the hedging facility is available, instead of stop you can use the hedging and still protect the equity. And once the hedging is filled, you can do either way trades. On the downside, if they drop, you can book profit. On the upside, if they rise, you can book profit. There are various other trading strategies associated. I just explained only the basic trading strategy now in an open forum. So if there are questions, then I'll answer the questions. So these are all the positions what I have taken straight in the market, because time is up. So even the European session I have not taken it. So I want to show that we can take the positions and we are sure to make money in these positions, but may not be a very big money, but still we'll be able to see that our limit is filled, or we can just trail the limit on the upside and maximize the profit. There comes your skill set, how you are calmly moving it, the limit on the upside and also the trailing stop, so that our minimum profit is protected by the trailing stop and the maximum profit is protected by the limit. So we can move the limit away from the market, but not the stop. Moving the stop away from the market is a bad trading practice. Okay, I'll come to the questions which are asked here. Okay, wine brown. Okay, the trading times again. So I don't know whether you have seen the trading times. I showed it again. Okay, yeah, I'll just show it again. So anyhow, it is being recorded. Even in part 1, the trading timings are shown. In the recorded information, it is available. So you can just make a note of it and watch the live market quote page, how exactly during early and the late session they are making very quick moves, and during mid sessions they are handling crosses. When you are convinced, then you can try to follow my trading system. Then from wine brown, an hour and a half before opening and an hour and a half before closing. Yes, correct. Then from winner FX, Euro USD and GBP both forecast to move up. How do you know which pair to trade? That is, which pair will move up more so that maximize the profit? Any clues from this live? Yes, we will be able to get the clues from the live market quote page, as I explained, that whichever the pair which is making the more positive net change is expected to move first. Now, during the European session, you would have noticed that GBP and Australian dollar was making more positive net change, and they made the upward stop end, whereas Euro was making less, so they just nominally gained. Now you find Euro is making more positive net change when compared to that of Euro and Australian dollar. So what they do is they gain first Euro, so that they will be able to reverse Euro Aussie cross what they gained, because during the European session, they showed more positive net change in the case of Australian dollar, less positive net change in the case of Euro. As a result, Euro Australian dollar cross was showing negative net change. Now you find Euro is showing positive net change and Australian dollar is showing negative net change. You can see Euro Aussie cross is positive net change. So I have not even looked into it, the cross value, but I just seen the major moves, and I was able to say that they are handling this particular cross. Afterwards, they will continue to rise Euro first, followed by that of Australian dollar, followed by that of GBP. You just find around 18:30 GMT how exactly they just gallop the moves slowly on the upside and make a little bit of volatile moves to confuse the traders, as if they know the outcome of FOMC beforehand. And afterwards, irrespective of the FOMC outcome, they are expected to gain the levels. So if they drop, then if the FOMC is negative, then they will say it is the USD weakening move. If the FOMC is positive, they will say simply risk appetite move. So anyhow, they are going to gain Euro and GBP, but they can give different interpretation. So what they are decided to do, they are not changing it depending upon the data release. And they only expect the traders to think wrongly and then make the move as per their expectations. On Friday, you know that non-farm payroll, which was very good, and so they said that USD gaining move, they made that dip in the case of Euro about 25 pips during around 13:30 GMT. Then afterwards, when US session started, they started gaining the levels, and everybody forgot about non-farm payroll and think that Euro is going up. And they have been holding around 1.29 on Monday as a week beginning false move. Then Tuesday onwards, they started gaining the levels. That's what I have given it in fxtrade.net, the forecast. You would have noticed that they are gaining the levels straight away from 1.29 to 30. Nobody talk about non-farm payroll now. That is the beauty of market, because the traders have got very short memory. So the players can continue to capitalize it. Then Douglas, can we expect GBP to rise back above that of? Yes, they are expected to gain more levels after FOMC. They will use it as a trigger. Always keep in mind the data release, prime data release time is used as a trigger, and don't expect them to move the market in tandem with that of the traders' expectations. They can give different interpretations, and they can use the media, TV channels and also websites, and use the analysts to give the publicity of what they intend to publish and justify the move. That's all. So, now has Euro already been doing intentional move since Monday? See, they alternate the intentional move with the extended move. So as I explained many times, that this month they intend to gain more levels in the case of Euro and GBP, and they wanted to make the USD weakening move. As far as numerator currencies are concerned, as far as the denominator currencies are concerned, from the year beginning I have been telling that they intend to gain the levels as a contrarian move. On a daily basis you can see the contrarian move. Then in the case of the commodity pairs, they are going to make only range bound moves. So that is unaltered. So you will find that they are making the trending move on the upside. In between they will alternate the intentional move with the extended move on the downside, again little bit of swings, then stop and then gain again. So all the intentional moves will be slow moves, extended moves will be quick moves. What is your buy signal? I had taken the position, you would have noticed it. Stop hunting tactics by players, correct. After half an hour, no lower low. Yes, you are right, sir. From Wine Brown, okay, I have, okay. Then Sandra, your presentation is clear, but would it be more clear if you present it with MT4 platform? See, to let us see what you exactly mean. I really appreciate your question. See, basically, I am of opinion the spoon feeding should not be done. You have to apply your mind little more. And if you got any doubts, you can always ask me. I am going to display my email ID and also my phone numbers, etc., my chat ID. And also in fxtrade.net, I am online in the chat forum. You can ask private questions also there. I will be willing to answer to those questions. And even here in this webinar, you can ask the question where exactly you are not able to follow. I'll give you, and you apply your mind and try to read the user manual of MT4 and try to see how exactly the various orders are to be selected. Because MT4 is not only the trading platform available in the world in different the brokers. There are other type of trading platforms also. So MT4 is predominantly used, but other type of trading platforms are also equally good. So I cannot show all the platforms and show you how exactly the positions are to be taken. See, I am only giving education. I am only explaining to how to perceive the market. And trading, probably you have to use your applications and use your common sense, and if there is any doubt you can ask in the forum and things like that. People will be certainly helping you. In fxtrade.net you find that a lot of people ask questions and they are beginners, and still you come across a lot of help is being extended to that other traders. Then Arifullah Beg, how about USDN? USDN is expected to gain the levels further up. So any dip near that of tomorrow's low, one can take a buy so that they will continue to gain the levels. See, after the gaining of the levels, you should not buy just like that. You know that it is a technical trade. As far as USDN is concerned, it is only making range-bound swings, about 50 pips now. So let them start making quick moves, then probably you can take even at the highest point, they will continue to rise. That will happen during that of the 3rd and the 4th week of December. So till such time, near the low set for the day, when the low is not been breached, you try to buy, you will be able to see a good profit. Ultimately, where you buy, whether you buy it at 83 or 82 or 77 is immaterial. How much of profit you earn out of that is more important. Then, when you say they, do you mean the interbank traders? No, sir, not at all. See, you come across the high net worth individuals, their money is being used by the private arms of the international banks, and they place orders based on their customers' request. And they make the circular trades, and their volume is 2/3 of the market volume, because most of the time you find the market is making swings because of the circular trade. And you know, such circular trades are being done by that of the market facilitators. You know, every market you will find certain people or certain institutions are identified as market facilitators. They need to float the market. If they don't float the market, or if they don't make small upward or the downward move, market will appear static. Nobody will enter in the market. Only if they quickly gain, people will rush and buy. When they drop, people will rush and sell. So such market facilitators will make the swings by circular trades. Besides, you find the players also do along with that circular trades. So you need to understand that. So they are slowly gaining the levels in the case of USD yen. So USD GBP, they have just made the dip below that of 1.6121, the initial high. Net change has become 0. But they are not gone to that. So similar move, they had done it during the European session in the case of Euro, and then subsequently they have gained. So I am sure GBP also they are going to gain. This they have done it in order to push up Euro GBP cross. So if a player puts limit, trader puts limit order 5,000 lots, player, it push the market down. Yes, you are right, and they have to place not at market, they have to place the order lower than that of the market level, then it will push the market downward. That can happen only in the bank terminal. You and I cannot place such orders. Then Adi, if you ask the bank dealers, if you happen to be associated with them or a friend unofficially, then you ask, they will tell you Euro has gained for 2 sessions, so do you expect? No, they have gained the levels during that of the European session onwards. So they made the downward stop and during the late Japanese session and started gaining during European session. So they will gain during that of the US session, and tomorrow Japanese session start, they will gain and start making a slide. That is intentional move for 2 sessions and the start of the 3rd session. Okay. Then how about USD CHF? They just made the drop, as I explained. They went up, gone down up to 40 pips. Now you find Euro is making 31 pips positive net change. CHF is making only 33 pips negative net change. So they just made the downward stop, and below that, this level 0.93, and they gone to that level of 20 pips or 21 pips, and then they started gaining the levels. And since they stopped cutting the new low for more than 30 minutes, and they are holding below that of the initial low, closer to this you can take a buy and keep a hedging order hedging order to limit the risk, because they are expected to slowly gain the levels again, like a contrarian move. They do one day contrarian move with yen, another day contrarian move with CHF. That's how they do it. And you find that they make the contrarian move, that USD CAD showing negative net change, Australian dollar showing negative net change, and both showing positive net change. That sort of moves they are doing it on a daily basis nowadays. Okay, wine. So the price flow towards the limit order. Automatically it will fill all the orders when they keep a lower level sell orders. Which pair are considered crosses? Okay, see, there is a distinct difference between the name majors and the crosses. The prime majors, namely Euro GBP and CHF, yen and CHF, they are trading against US dollar, the universal currency. That is why they are called majors. And USD CAD and Australian dollar, they are expected to make the moves in tandem with that of the commodity exports and imports. That is why they are called commodity pairs. And then non-US dollar pairs, like wherein Euro Yen, Euro GBP, Euro CHF, there you don't come across, they are not trading against US dollar, they are trading against each other. and they are all referred as the crosses. Of the crosses, when they are trading against yen, they are called yen crosses, and when they are trading against that of the European counterpart, like Euro GBP, Euro CHF, they are all called the European crosses. Then the other rest of the currencies are called regional currencies, like Indian rupee, Singapore dollar, and things like that. But, various terminologies are being used from that of the earlier occasions. So that's part of the game, in order to see that there is a disconnect from that of the earlier understanding of the market. Okay, we need to wrap. Yes, sir. Okay, there are so many questions. Okay, I am extremely sorry that I'm not able to answer to the rest of the questions, so I'll go to that of the last. So as far as trades are concerned here, so these are all the trades. I had taken it. Now euro is slightly up, GBP is also coming up, and Australian dollar around the same level. So at the end of the session, after FOMC, you can just see what happens to that of the market. Then you can give your feedback. Objectively, you can give your feedback whether you like it or not, and so that I'll be able to explain to you further with regard to these things. So I'm just winding up this webinar. So I take this opportunity to thank FX Street and also you people for your kind presence and understanding and asking questions, etc. These are all my contact details. My website address I have given, my email ID, dr@i-knoindices.com, and my MSN chat ID is given, iknowindices@hotmail.com, Yahoo chat ID, iknowindices@yahoo.com. My phone numbers, landline, as well as the mobile numbers I have given. And tomorrow I'll meet you all again during Asian session live market analysis. I'll be presenting the webinar between 5 and 5:45 GMT. Thank you one and all. See you tomorrow.